Here it is. We made it. We're getting ready to tackle the number one most asked question I get from home buyers in Southwest Missouri. I'm Walt, the Realtor with Coldwell Banker in Springfield, Missouri, and this is the final video in my series, The Top 5 Questions Every Home Buyer Asks. We've already talked about credit scores, down payments, whether you should wait for prices or interest rates to drop, and how to make sure you're not overpaying for a house. If you missed any of those videos, click the link in the top right corner of the screen to visit that playlist and get all caught up. But if you're watching this video somewhere other than YouTube, like on Facebook or Instagram, you're not going to be able to see that link. So you'll need to head over to youtube.com/@WaltTheRealtor to find all my videos, including this playlist. And now, cue drum roll. Here we go. So when you ask, what do I do first? Do you mean other than hiring a good realtor? Okay, look, if you're serious about buying a home, the first thing you need to do is not house hunting. Stay off of Zillow. The first thing you need to do is get pre-approved for a mortgage. And I want to be clear, it's pre-approval, not pre-qualification. They're not the same thing. Pre-qualified just means that you found a lender willing to sign a piece of paper saying that you meet some basic criteria that should qualify you for a mortgage, but they're not verifying any of your information, so that paper really isn't worth much. A pre-approval is different. It says, yes, you are absolutely financially ready to buy a house up to this amount, and we're going to take care of you, but it's also assuming there's nothing about your situation that changes in the meantime. More on that in a minute. So here's why pre-approval needs to come first. Number one, you're going to know your budget. Without a pre-approval, you're really just guessing, and usually people guess too high. Number two, sellers will take you seriously. When you make an offer on a house, if you include a documented pre-approval, it puts your offer ahead of other offers that don't have one. You'd be surprised how many deals fall through at the last second because it turns out the buyer couldn't get the mortgage they thought they could. And especially in a competitive seller's market, a lot of times offers that don't include a pre-approval are just ignored altogether. Number three, it speeds things up because you're already halfway through the mortgage process before you even make that offer. And number four, it gives you a heads up on any financial issues you might not be aware of. So if there's a problem with your credit, your income, or your debt to income ratio, you can get it fixed now before you fall in love with that house. So here's how you do it. First, before you ever apply for your pre-approval, I'm going to really recommend that you pull your own credit. And I'm not talking about the free services being offered by companies like Credit Karma or your credit card company. Those are fine, but those are ballpark estimates at best. I'm talking about getting your real credit reports from the three primary credit reporting agencies, which are TransUnion, Experian, and Equifax. There are other legit credit reporting agencies out there, but these are the big three, and they're each required to provide you with a free copy of your report once a year. So visit their websites, sign up for an account, it's free, but they will need you to verify you are who you say you are, so expect to jump through a few hoops. So while there are loans available for folks with a 580 score, most lenders want to see a score of at least 620, but the higher your score, the better your rate and the lower your monthly payments are going to be. So make sure you completely read all three reports cover to cover to see if there's anything inaccurate in there. If there is, each agency has a procedure for contacting them to fix it. Once you're happy with your credit reports, it's time to talk to some lenders, and I'm emphasizing the word some. I encourage my clients to talk to at least 3 lenders, starting with wherever you currently bank, because sometimes just being a current customer will help your cause. But you're going to want to talk to at least one traditional bank, one credit union, and one mortgage broker. Be prepared to explain your entire situation and ask them to find the best loan options for you. There are loan packages available for most circumstances as long as you have an income, you're not buried in debt, and you're not behind on bills. They should each be willing to provide you with a pre-approval that shows you the maximum mortgage they'll grant you and what your monthly payment will probably look like, keeping in mind that the payments will include things like home insurance, property taxes, and either mortgage insurance or loan fees, depending on what kind of mortgage you get. And the lender should be willing to help you estimate what those additional fees might be. Lenders are going to ask you for a year or two of W-2s or 1099s, some recent pay stubs, tax returns, bank statements, that kind of stuff, and also a valid state ID. Don't be afraid to ask questions. Lenders want to do business with you, so they're planning on walking you through the entire process. It only makes sense that they'll want you to understand it. After you complete the application process, the lenders will run your credit check and review your documents, and assuming everything checks out, you'll get the letter. Treat that letter like it's your golden ticket to getting your offer accepted, because it might be. But keep in mind, it's not a contract. If you do something, and I'm going to use a bad word here, stupid, like buying a car on credit or opening a new credit card, or heaven forbid, forgetting to pay some bills while this process is going on, then all bets are off. Your credit score and your debt to income ratio are now different, and you're going to have to start all over. Years ago, to qualify for a mortgage, I had to trade in my truck, which I loved, for a little clunker car to get my monthly debt payments down, and it broke my heart. Now, I didn't buy the truck during the loan process, putting myself in that situation, but people do that. Be smart. Don't do that. So before we wrap up here, there's a couple of things I'd like you to keep in mind. First, your pre-approval will probably be valid for 60 to 90 days, which should be plenty of time to find a house that you want, as long as you don't drag your feet. And if you spend that much time dragging your realtor around town looking at houses, don't be shocked if they tell you to reapply for a pre-approval before they'll show you more houses. I mean, that's a lot of unpaid time they've been spending with you. Also, your pre-approval amount doesn't have to be your budget. So if you've been approved for, let's say, $350,000, that doesn't mean you need to buy a $350,000 house. If you know what you want your monthly payment to be, ask the lender to do some math to come up with a budget based on that. Just say, hey, I'd like to keep my monthly payment, including insurance, taxes, PMI, and fees, to pick a number, $2,000 a month. Can you convert that number to a ballpark price range for me? And if they say no, you probably don't want to be doing business with them anyway. And remember, pre-approval is a strategy. It'll give you confidence, it'll make you competitive, and it gives you the ability to shop smart, negotiate hard, and buy with peace of mind. That wraps it up. If this video helped you feel a little more prepared to buy a home, do me a favor and give it a thumbs up. That'll tell the YouTube algorithm to show this video to more people just like you who have the same questions that you have. And while you're at it, subscribe to my channel. I put out videos like this from time to time to answer all kinds of real estate questions that pop up, and I'd hate for you to miss out on new content. Buying a home doesn't have to be overwhelming. You just need the right guidance and someone in your corner. If you're ready to take the next step, scan the QR code on your screen to schedule a free consultation, or grab my free first-time home buyers guide to walk you through the process step by step. If something in this video wasn't clear, or if you have a different question I can help you with, drop it in the comments and I'll answer it. I'm Walt the Realtor with Coldwell Banker in Springfield, Missouri. Thanks for watching. Happy house hunting. See you next time.